Hello, everyone. Today, we're going to break down the American market, take a look at a few instruments, and highlight the key points that I hope will help you make your trading decisions. Let's get started, and we'll start with the Nasdaq. Nothing has changed on the monthly chart since the last review. The price continues to stay at the upper boundary of the new upward channel, and most likely, we should expect a correction of the previous move, at least down to the breakout level, or maybe even further down. We'll see how that plays out over time. Now, let's switch to the daily chart. Here, too, not much has changed since the last review. After setting a new high, the price is still fluctuating with the same range. I can only note that I don't see any significant buying efforts in this fluctuation. So there's really no reason to talk about a continued upward movement since overall the situation hasn't changed. That's why I'll keep my previous chart expectations unchanged for now. So, for those who are holding shares in their portfolio, I'll repeat what I said earlier. I think it's possible to partially or fully lock in profits and wait out the correction. I expect the correction to end in the range of $26,500 per share. But if buyers don't attempt to resume the upward movement at this level, the correction could go even deeper. It's quite possible to see the price around $23,500 per share. I think buying or adding more shares at the current level is risky. Yes, the price could go higher, but I consider that possibility to be minimal. Next up are Tesla shares. On the monthly chart, the price is moving within an upward trend and continues to trade around $400 per share. The levels and trends from the previous review remain relevant. Based on the volume, everything points to the asset's price continuing to rise in the future. Although buying isn't dominating at the moment, I also don't see any significant selling. The key barrier to further growth is the $490 per share level. If this level is broken, I would consider $750 per share to be the global target for the asset. Let's switch to the daily chart. Here too, there aren't any major changes. Yes, the price is fluctuating and dipping slightly below the previous low, but this move isn't supported by any significant selling volume. This could indicate that it's just a continuation of the correction from the previous growth. Only after significant volume appears in one direction or the other will it be possible to talk about further targets for the asset. I'll refrain from making any new chart-based predictions. So, for those holding shares, yes, this downward movement is making people nervous. But as I said before, based on the volume, the situation still looks like growth will continue in the future. The most pessimistic scenario would be the price dropping below the $350 level to gather liquidity. It will be better to buy or add more shares after we see buying volume and confirmation of the movement. Next up are Nvidia shares and their monthly chart. The trends and levels remain relevant. I don't see any major changes on the chart. The price reversed from the previously marked range and went back below the level it had broken through earlier. The volumes confirm the start of a downward movement. And as I mentioned in the previous review, the likely target of this reversal is the next level in the range of $170 per share, where we will assess the player's efforts and make new decisions regarding the asset's targets. Now let's take a look at the daily chart. In the previous review, I suggested two possible scenarios for how things could develop. First, if the price breaks through the $212 level again, I would expect a move to the nearest high. And the second scenario is a continued decline. As we can see, the level held and the price continued to fall. Of course, it's possible to expect a resumption of buying from the lower boundary of the ascending channel, but I consider that probability to be minimal. I think this level won't hold and will let the price drop to $170. So for those who are holding shares in their portfolio, I can't say anything positive at the moment. I expect the asset's price to continue declining. You should only consider buying more shares after there's confirmation of buyer strength, which for now I would expect either at the lower boundary of the ascending channel or already in the $170 to $175 per share range. Next up are AMD shares and their monthly chart. The levels remain relevant as well. The price keeps trying to continue its upward movement, but since the last review, these attempts have not been successful. Yes, the price did reach a new high, but at the same time, sellers are trying to hold it back. there still isn't enough volume to support further growth. Now let's take a look at the daily chart. In previous reviews, I anticipated the start of a correction, but the price continues to fluctuate near the highs around the round level of $500 per share. It also set a new previous maximum, but for now, this looks more like a manipulation. The situation with the volumes is debatable, and I can't say with absolute certainty that a correction has started, but for now, I'll stick to my graphical expectations. After all, this scenario still seems more realistic to me. So, for those who are holding shares in their portfolio, if the price drops significantly below $500 per share, that will be a strong signal for a correction down to the $350 range. I don't recommend buying or adding more shares at these highs. Well, that's roughly how I expect things to play out. And if you think differently, let me know in the comments. And don't forget to like and subscribe to the channel so you don't miss future reviews. I hope this was very helpful. And don't forget, we can make assumptions, but the market decides.